Right now, the U.S. markets are currently closed, but looking at the most recent trading session, shares of Ondas Holdings, Inc., trading under the ticker ONDS on the Nasdaq, closed at $6.74. That represents a significant upward move of 47 cents, translating to a 7.42% gain on the day. While a 7% move might look like standard volatility for a small-cap tech stock, the volume profile and the specific nature of the buying pressure we saw suggests something far more structural is happening beneath the surface. Most investors looking at the chart see a simple green candle, but if you look closer at the order flow, you see a distinct accumulation pattern that often precedes a major repricing event, specifically in the autonomous systems sector. The expectation for a company like Ondas has long been that it is merely a speculative play on commercial drones, a sector that has historically promised much and delivered little due to regulatory red tape. The reality, however, is substantially different and far more aggressive. Ondas is not just building drones, they are quietly constructing the essential data infrastructure and automated response networks that secure critical national assets, effectively positioning themselves as a utility-grade necessity rather than a luxury technology. This disconnect between the drone stock expectation and the critical infrastructure reality is exactly where the opportunity lies, and it is why we are seeing such aggressive repricing at the $6.74 level. When we analyze the recent price action, specifically this 7.42% jump, we have to look at it through the lens of institutional versus retail behavior. Retail traders, perhaps those using the Robinhood app or engaging in Robinhood stock trading, often chase these moves after the fact, reacting to the percentage gainer list. However, the initial bid support we saw building throughout the last session indicates institutional accumulation. Unlike Tesla stock or Apple stock, where high-frequency trading algorithms dominate the minute-by-minute action, moves in a stock like ONDS are often driven by specific desk execution, funds taking positions based on fundamental shifts. We are seeing a rotation where capital that might typically sit in passive vehicles or Schwab Intelligent portfolios is being actively deployed into these high-beta names because the growth thesis has been validated by recent revenue figures. This brings us to the core driver of the current momentum. The market is waking up to the massive year-over-year revenue surge, up over 500% in the third quarter of 2025, which completely shatters the bearish thesis that this company cannot scale. When you see revenue jump from just over 1 million to over 10 million in a single comparable quarter, you are no longer looking at a concept stock, you are looking at an execution story. This kind of growth is what attracts the attention of sophisticated traders using platforms like Interactive Brokers, where the Interactive Brokers trading tools allow for deep analysis of order block sizes. They are seeing that the backlog is not just growing, it is doubling, sitting above $23 million, with a clear line of sight to significantly higher figures as the government contracts for counter-UAS systems begin to hit the books. It is crucial to understand the broader market environment to really grasp why ONDS is moving now. We are currently in a cycle where defense technology and automation are seeing a massive inflow of capital. Investors are looking for the next NVIDIA stock, not in terms of chip manufacturing, but in terms of the application of AI in the physical world. Ondas fits this narrative perfectly because their platforms like the Optimus system and the Iron Drone are essentially physical AI agents. While NVIDIA stock creates the brain, Ondas provides the body and the nervous system for industrial autonomy. This distinction is vital. Many investing sites and general financial news outlets lump all robotic stocks together, but smart money distinguishes between hardware manufacturers and integrated solution providers. Ondas is the latter. Let's talk about the specific mechanics of how investors are accessing this trade. We are seeing a divergence in strategy. The self-investing crowd, often utilizing Fidelity Investments or their Fidelity mobile app, has been slow to adopt these microcap names, largely because they are often filtered out of standard quality screens due to past unprofitability. However, as the cash balance has swelled to over $400 million thanks to recent raises and warrant exercises, the bankruptcy risk that typically scares away users of Fidelity Wealth Management or Fidelity Mutual Funds has largely been mitigated. The company now has a fortress balance sheet relative to its market cap, which acts as a floor for the stock price. This cash pile allows them to execute on acquisitions like Centrix without worrying about immediate liquidity crises, a luxury that most small-cap competitors do not have. The rise in online investment interest for ONDS is also tied to the regulatory environment. The Federal Aviation Administration, or FAA, has recently granted waivers for Beyond Visual Line of Sight, or BVLOS, operations for the American Robotics subsidiary. This is the holy grail of the drone industry. Without BVLOS, a drone is just a toy that requires a human to watch it. With BVLOS, it becomes a fully autonomous worker. This regulatory win changes the unit economics of the entire business model. Suddenly, a single operator in a control center in Baltimore can manage multiple systems across the country. This scalability is what Fidelity brokerage analysts and those utilizing interactive broker stock trading capabilities look for when modeling future cash flows. It turns a service business into a software-like margin business over time. Now I want to address a common misconception. Many people think that online investing in drone stocks is a play on package delivery, dropping burritos in backyards. That is the wrong mental model for Ondas. Their focus is on dull, dirty, and dangerous jobs. We are talking about inspecting rail lines for miles to prevent derailments, monitoring oil and gas pipelines for leaks, and increasingly, protecting airspace from hostile drones. The Iron Drone system is a counter-UAS or unmanned aerial system solution. In a world where geopolitical tensions are rising and drone warfare is becoming a primary threat vector, the demand for a system that can physically intercept and disable hostile drones is skyrocketing. This is not a consumer play, it is a defense and critical infrastructure play. The total addressable market for counter-drone technology is projected to quadruple by 2030, and Ondas is positioning itself to capture a significant slice of that pie. This brings us back to the stock's recent performance. The move to $6.74 is likely just the beginning of a repricing event if the company hits its 2026 revenue targets of $110 million. If you run a standard price-to-sales multiple on that target, comparable to other high-growth defense tech firms, the current valuation begins to look disjointed from reality. This creates a tension. The market is pricing ONDS like a struggling small cap, while the data suggests it's morphing into a high-growth mid-cap. This gap is where the alpha is generated for those paying attention. If we look at the institutional landscape, we have seen interesting movements. Funds like Renaissance Technologies and Citadel have been reported to be increasing their positions. These are not emotional investors, they are quantitative giants. When they start building a position, they do so because their models see a statistical probability of upside that outweighs the downside risk. For an individual investor managing their own capital, perhaps through SoFi Invest or looking at SoFi stocks, following the smart money footprints is a valid strategy. It provides a layer of validation that goes beyond a simple press release. You can see this data if you dig into the 13F filings, often available on various investment help portals, but the price action itself is the best real-time indicator. The stock holding the $6 level and pushing through resistance at $6.50 is a technical confirmation of this fundamental thesis. I want you to take a moment and think about the security implications of this technology. Comment below. Do you think the government will accelerate the integration of private counter-drone systems at domestic airports and stadiums, or will they keep it strictly military for now? I'm curious to hear your take on the regulatory speed here. Continuing with the analysis, we must discuss the risks, because no analysis is honest without them. The primary risk for Ondas has historically been cash burn. Developing autonomous systems is expensive. It requires heavy R&D spend. While the recent capital raises have solved the immediate liquidity issue, they came at the cost of dilution. Shares outstanding have increased, which means the pie is cut into more slices. For an individual investor using Robinhood fractional shares or a small Fidelity IRA account, this dilution can be frustrating because it dampens the per-share price appreciation even if the market cap grows. However, the company's pivot to acquiring revenue-generating assets, like the investments in Performance Drone Works, suggests a shift from pure R&D spend to purchasing cash flow. This is a mature strategy that should eventually offset the dilution drag.